Hello, welcome to another video tutorial. We are going to look at Fibonacci retracement, and I'm going to show you how to use the Fibonacci retracement as an expert. Kindly hit the like button and most importantly, hit the notification bell to be always notified when new content is released. To start with, we are going to cover how to set up the Fibonacci tool the clean way, such that we make it more effective to be used. So this is what you do. On the right panel of your trading view, you have on the side of tools, click where the gun and Fibonacci is, and you will see a Fibo retracement tool. Click on it. Then on the charts, click once and drag it on your left. Click again. So this is your Fibonacci retracement tool. So by default, this is how it looks like. Now, let's make it more clean and effective to use. So you click on the Fibonacci and then the menu bar will pop up. So when this menu bar shows up, click on the settings here. It is going to bring you different options. So the first thing, we want to remove this trend line. Then you go ahead and uncheck it. The trend line has disappeared. The second step, we want to unselect and remove any figure which is above 1. So we come here, we have very many figures. We have 0, 0.38, 0.618, we have 1, 2.618, 4.3. There are very many figures, but anything above 1, we unselect it. So I unselect 2.618, I unselect 4.238, I unselect 1.618, and again I unselect 3.618. It is going to leave me with these figures, the figures which are between 0 and 1. Again, on the settings icon, you click, extend this panel on the left, remove the background. So where there is background, we uncheck it and it leaves us with this. Then we want to remove the figures to reduce on the clutter. So we remove these figures such that we remain with the fib levels only. So what you do, look for where there is prices, you uncheck it. And when you uncheck, you see they have disappeared. Next, we want to turn these levels into percentages. So where there is levels, click on the drop-down menu, choose percents, and the levels are now in percentages. We have the 0%, 23.6%, 38.20%, 50%, 61.8%, 78.60%, and 100%. Then we want these percentages to be on the right-hand side. On the same point where there is levels, on the drop-down menu where there is labels, click and choose right. So the percentage levels are now on the right-hand side. We also want to increase on the size of these percentages so that we can see them clearly. So where there is text, drop-down menu where there is font size, click on 24 and you can see. Then next, we want to make these lines bigger for us to see them clearly. We then come where there is level, you choose the 1, 2, 3, the first one, click on it. And then here you have your Fibonacci tool. You have the 0, 23.6, 38.2, 50 level, 61.80, 78.60, and 100%. The next step is turn 0%, 23.60%, 78.60%, and 100% to white. So we are going to turn white, then 23.6% white, then we are going to turn 78.6% white and 100% white. This leaves us with the levels that are most important to us. We are going to unselect the 0.236. We again unselect 78.6%, and these are the levels we are being left with. So this is now your Fibonacci retracement tool. Moving on to the next thing, that is how to apply the Fibonacci retracement tool. So before we continue, if you are enjoying this tutorial, please hit the like button, subscribe, and leave a comment on what video topics you want us to cover. Join our Telegram community and be part of our trading community. So let's move on. To use this Fibonacci retracement tool, when price approaches these levels, here 38.2% is for shallow pullbacks. Then the best levels we have are these. When price approach the 50%, we call that a good level. So these are the levels. 50, we have the 50%, which is a good level. We then have the 61.8%. This one is the best level. Take it to be the best level. And the zone which is in between, the zone which is in between 50% and 61%, that one we call it the great level. So the zone between 61 and 50% is the great level, or you can call them zones or areas. Zones, or you can call them areas, because these levels, they are not just a line, they can also be zones. These are the levels that make up the Fibonacci retracement tool. So we have the good level or the good area. We have the great area, that is the level between the 50 and 61. We call it the great area. Let's look at how to apply the Fibonacci retracement tool on our charts. We agreed that assuming you have an uptrend, because we said price moves making higher highs, higher lows, and higher highs. In a downtrend, it is the same thing. You will have price move making lower lows, lower highs, lower lows, lower highs, and then lower lows. So if I mark these levels, you have price giving you higher highs. Here, this is a higher high, and then this is a higher low. You also have price give you a higher high and also a higher low. This is a higher low. The same thing applies to a downtrend. You have price give you lower low, and you also have price give you a lower high. You have a lower low, then a lower high. So in a strong moving market, you will have price do this. And we also said that this is an impulsive move, and then this is a correction. You have price giving you this impulsive move, so this is an impulsive move. And we also identified what a correction is. We said this is a correction. So if this is our correction, this one here, the same thing applies to this. This is our impulsive move here, and then we shall also have a correction up. So this is an impulsive move, this, and then this is a correction. So to use the Fibonacci retracement tool, this is what you do. You get your Fibonacci retracement tool and click it on the swing low, drag it to the swing high, and you extend it on the right. You click again. So you will be watching price. When price comes into the 50%, you look forward to take action based on what price has given you. The same thing applies to the downtrend. You click your tool and then click on the start of the impulsive move to the end of the impulsive move, where the market shows you that it is beginning to pull back, and click again. So you will be watching price as it comes back into your fib levels. Price comes and reaches where 31.8 is. It reverses, that means it is a shallow pullback. If price comes into the 50%, that means it has pulled back 50% of the previous impulsive move. And then if price comes into the 61.8%, it means price has pulled back 61.8% of this previous impulsive move. Why do these fib levels work? So the Fibonacci retracement levels you're seeing, they act as a form of support or resistance in a trending market. Let's say when price is going up in an uptrend, so these levels act as a form of support or resistance in a moving trend. Let's say you have price which is moving, making higher highs, higher lows. Once you see this price beginning to pull back, you get your Fibonacci retracement tool and place it at the start of the impulsive move up to the end of the impulsive move. That means from the swing low to the swing high. Then you watch price as it pulls back. If it comes to the 50 level, we say that one is the good level. And if it presents you with a trade opportunity, you enter in for buys. If it comes to the 61 level, it is the best area, presents you with the trade opportunity, you enter in for buys. So the same thing applies to a downtrend. You have price which is moving in a downtrend, and then it gives you this move. So what you do, you place your fib tool from the swing high to the swing low, and then you have it stretched out and marked. When price begins to pull back, and if it comes to the 38.2%, presents you with a strong signal, you enter the market. If it comes to the 50% and it presents you with a strong confirmation to sell, you sell. But if price comes to the 61% and it presents you with an opportunity, you sell. If it comes in the zone between 50 and 61, sell. So that is how the Fibonacci retracement tool works. Another reason why the Fibonacci retracement tool works is because of herd mentality or self-fulfilling prophecy. So the herd mentality works in this way. There are different schools of traders that use Fibonacci. When price comes back into this level, the schools of Fibonacci traders who trade using Fibonacci, they will be looking forward to enter the trade. So because I am using Fibonacci, you're using Fibonacci, another trader is using Fibonacci, that's also another reason why it works. So one, it acts as a form of support or resistance. And secondly, it is because of the herd mentality or the self-fulfilling prophecy. This one is using it, this one is using it, and this one also uses it. That's why it works. So when price comes to these levels, you're seeing institutions who are already winning and they are already in this moving trend. They will look forward to open up new positions to push price lower. So these Fibonacci retracement levels, they act as areas of value to a moving trend. So institutions will look to add on their winning positions to push price lower. Let's go to the charts and see how to identify this. So here is our chart. I'm on Euro USD chart, and as you can see, this is a clear moving downtrend. Price is making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and lower lows. So we said for you to use your Fibonacci tool, this is what you do. You get the Fib retracement tool, click at the start of the impulsive move, and then drag it to the left and click again. So this is your Fibonacci retracement tool. The first thing is to identify a moving trend. So you identify that this market is in a moving downtrend like this. Then you also identify prices making lower lows, lower highs, and then a lower low. So what you do is this. You get your Fib tool, place it where the swing high is, and then the swing low. You have it marked and stretched out. So when price comes and it pulls back into the Fib level, like here it presented you with a long wick candle rejecting the 50%, then you go ahead and take short trade entries. You again pick your Fib tool, click on it from the swing high to the swing low. Then here, the trade opportunity presented itself on the 61.80, which is the best level. Then again, you also pick your Fib tool from the swing high to the swing low here, and you wait for price to come back into your level. So here we see price is reacting on the 50% level, which is a good level. We have a candle color change, and this presents you with a short trade opportunity. So that is in a downtrend. Then let's also look at an uptrend. So the same thing applies to this. So you realize price is in a clear moving uptrend here. Then you get your Fib tool, click it on the swing low here, and then click it on the swing high. So you wait for price, and when price came back into this level, you had a double bottom, which shows accumulation, and then price bought. So that is how we use the Fibonacci retracement tool. What we have just covered is simply scratching the surface. If you want to take your trading to the next level and become a successful, consistent, profitable trader, stay tuned on this channel, and you can as well join our trading institute where we take you from beginner level to an expert level. Leave a comment on what video topics you want us to cover next. Don't forget to give us a like, as it allows us to produce more free content on YouTube. Don't forget to hit on the subscription bell to be always notified when new content is released. Join our free Telegram community to be always updated on when new projects will be dropping. Thanks for watching. See you in the next video.